Hi, everybody. This is Nate Williams. Now that you have secured the PPP loan, the next step is to get you back on payroll. I'm not talking about your employees. For them, you should pay them when they work and when you have work for them. I'm talking about you, the doctor, possibly your spouse, and possibly your children. This is our goal here is to maximize the loan forgiveness and to time this right with you getting back off unemployment for many of you and back in and working with your practice. As we do this, as we seek to put you back on payroll, there are several decisions that we need to make, several questions to answer that we need to get your involvement in. The purpose of this video is to talk you through some of those decisions that need to be made, and just so that when we speak to you on the phone, we can have a more efficient conversation and a richer engagement. We're going to endeavor to speak with every single one of our clients in the next couple of weeks, which is a big task. And so by you watching this video and learning and understanding what some of these questions are, we think that our time together will be much more efficient. I'm going to share my screen and talk through some of the different questions we need to ask or answer. The first decision we need to make is how much should we pay you for your gross wages? The second decision we need to, or the second question is how much should we withhold for taxes, and should we withhold anything for taxes? Third, should you start contributing 401k salary deferrals? Fourth, how much do you want your net pay to be? Fifth, how should you start contributing to your profit sharing, and if you have it, a cash balance plan? So those are the questions that I'm going to cover briefly. The first one, how much should your gross wages be? In this spreadsheet, this is a sample spreadsheet that we use to calculate your payroll. When I say payroll, what I'm most concerned about is what lands on your W-2 at the end of the year. This is a very important strategic tax planning thing, your W-2. This shows the year-to-date payroll for this sample client. Here's the gross wages of $59,375. Federal taxes have been paid of $36,823, and a Roth 401k contributions of $4,062.50 have been made. What this shows up here is what I want the year-to-date numbers to look like. And so we can and do make changes to payroll throughout the year. What we're mostly concerned at this point in time is what is your payroll going to be over the next 2 months, over this 8-week period. So I'm going to use, just for simplicity's sake, someone who is paid monthly, and the next paycheck being May 30th, and then again on June 30th. Now, if you're paid semi-monthly, we can cut this in half, and we can adjust the pay dates as well to make sure we get the desired amount in the 8-week period. So how much for your gross wages? If you received the PPP loan, which means you're watching this video, at a minimum, we want your gross wages to be $8,333.33 per month, or $16,666.66 for the 8-week period. That's the maximum amount that can be forgiven, and so that's the minimum amount that we want to pay you. Now, we might pay you more than that, but we're going to pay at least that amount. As far as paying more than that, the decision there, whether or not to pay you more, is for 2020, are you going to attempt to make the maximum profit sharing contribution? This applies to those of you who have a 401k profit sharing plan, and those also who have a cash balance plan would be included in this. And are you trying to maximize that profit sharing? If you are, then we're going to want your gross wages for the whole year to be $285,000. And so for that client, I'm going to bump gross wages up to $285,000, which means we're going to be paying $28,000 per month. So for the sake of this example, I'm just going to jump back to the amount that gives me the $833 per month. But that's question number one. How much for your gross wages? Are you doing the minimum $833, or are we going to do something more in effort to maximize the profit sharing and cash balance plan for the year 2020? The next question is, should we withhold for taxes? Now, for the last 2 months, nobody's been making any money. or most of you haven't anyways, or very little. And so we're not concerned that you haven't been paying taxes if you haven't. The other thing is, at this point in time, we're not putting any effort into trying to really pinpoint your taxes, your tax projection for this year. There's just too many unknowns at this point. In July and August, we'll start to really hone in on that and fine tune that tax projection. But for now, we're just trying to get you through the next 2 months. If you're flushed with cash and you're not worried about cash flow at all, you might want to start withholding for taxes. There's nothing wrong with that. If you're tight on cash, or you're not expecting to make very much money in the next couple of months, then we might want to just not withhold anything for taxes over the next 2 months. And that's fine. In that case where you don't withhold anything for taxes, you can see the tax withholdings here are 0. And of course, the Social Security and Medicare are mandatory. In this case where you withhold 0 for taxes, we just want you to understand that if you're making money, you're going to be getting further behind. That's not a problem as long as you're not spending the money. As long as you have the money on hand, we can deal with that later. The next question is, should you start contributing to your 401k salary deferral? For most clients, the answer is going to be yes. If you're starting your gross wages and if you have a 401k plan, let's go ahead and start funding your salary deferrals. The reasons not to do this, I think, are twofold. First, you still owe money for 2019 for a profit sharing and or cash balance contributions. If you still owe money for those investments for 2019, then let's not make investments for 2020 yet. Let's prioritize funding 2019. The second reason to not start to fund your Roth 401k, the salary deferral portion, is because you're so tight on cash that you just can't afford the cash outflow right now. If this PPP loan is your lifeline, if it's all you have, I would say let's not fund the salary deferral. Now, just to clarify, this amount right here, your gross wages, is the only thing that is going to be eligible for forgiveness. The rest of this stuff, the salary deferrals, whether you withhold taxes or not, has nothing to do, no bearing on the forgiveness. It's just this right here. The rest of it is totally up to you and your preference. The next question is, what do you want your net pay to be? Now, a lot of doctors get confused when we ask them this. What do we want your net pay to be? What we mean by that is, how much do you want us to drop into your personal account for spending? Now, most people think that if you have a gross wages and then you have deductions out of those, isn't your net pay just whatever it is? Well, the answer to that is yes, in most cases. I'm going to assume that this person is going to withhold something for taxes. However, we can make your net pay be whatever we want. We just add to it a fixed draw or a negative draw if we want to increase or lower your net pay. For example, let's assume that you want to have $10,000 to spend at home, and your net pay would otherwise yield $2,869. I'm going to add $7,200 of a fixed draw, so that your net pay, what gets direct deposited in your account, is that $10,000. Others of you might say, I have plenty of cash at home. Let's leave everything in the business. In that case, I'm going to do a negative draw so that what's direct deposited is a very small amount. I could even get this to 0 if I want. Finally, should you start contributing to the profit sharing and cash balance plans? At this point in time, we do not know if these contributions will be forgivable for the PPP loan. We do know that these amounts, the profit sharing and cash balance, if you have it, were included in what you applied for the funds. But again, we don't know if the owner portion will be forgivable. What we do know as well is that if you don't contribute anything, whether it's forgivable or not, you won't have anything forgiven. So making a contribution to the profit sharing and cash balance, if you have it, gives us at this point in time, and this is May 5th, the opportunity for forgiveness, but not the guarantee of. So that's one of the decisions we need to make. Again, in conclusion, how much for your gross wages? Should we withhold for taxes? Should you start contributing to your 401k salary deferral? How much do you want your net pay to be? Should you start contributing to profit sharing? These are the questions we're going to be reviewing with you on the phone, and we look forward to those phone calls, and we look forward to working with you. Thank you very much. Have a wonderful day.